we think about 2026, and that's probably when the Fed is, more dovish than they are now. That's a tailwind for risk assets. So I actually think, weakness here should be bought, and I'd still be buying dips. Over the last couple of weeks, as markets rallied, our macro clients have actually been really fighting this tape. They've been very skeptical of stocks rising, and we can see it in the prime brokerage data where gross is actually high, but net is low, meaning hedge funds are shorting this rally. And we know there's still a lot of cash on the sidelines. So investors are looking for excuses for the market to fall. I mean, I'd say even that interpretation from Barclays is just another good example. I mean, previously we didn't want high tariffs. Now someone's arguing that if tariffs are lower, it's bad for the fiscal situation. I almost think someone's trying to say heads I lose, tails I lose. But at the end of the day, if we get a tariff resolution, that's good for stocks. And I think companies survive this gauntlet of terror. That's why multiples should be higher next year.
Tom Lee kicks things off by zeroing in on a major macro trend: the chaotic evolution of tariff transparency. With courts now weighing in and the White House caught in the crossfire of political press, it's no wonder investors are asking what's the next move. But according to Lee, this complexity isn't a setback, it's actually a good sign. Why? Because it's narrowing the bid-ask gap between U.S. demands and what global trade partners are willing to offer. In short, we're inching closer to real progress on trade. If you're finding this insight valuable, don't forget to like this video, subscribe, and hit the bell icon so you never miss an update on macro trends, crypto, and digital assets. We've got tons more deep dive content coming your way. Drop your thoughts in the comments below. We read every one, and your input drives future content. Every like, share, and comment helps us grow and reach more people like you. Thanks for watching, and let's dive back in.
I mean, I think in the near term, of course, the visibility on tariffs has gotten messier because now we have the judicial system weighing in on what can be done and the response from the White House. But because I think the scope of what can be accomplished with tariffs has actually shrunk, it means when we think outside the next couple of months, I think that ultimately it's pushing us closer to a resolution, because now the bid ask between what other countries might accept versus what the White House is trying to achieve is actually shrinking, and that gets us closer to the end game. So I think this is actually a net positive for stocks. And I can understand why markets are confused, but to me, I think the equity risk reward is still better today than it was in February 2025 when the S&P was at its old highs.
Right. So, I mean, in particular, do you look at the chip rally? Do you look at NVIDIA, which is, for what it's worth, kind of coming back down to earth after that big rally on the heels of its earnings last night? I mean, is that where you would look to kind of press into, or how do you think about what the rally might look like between now and year end?
Well, I think that when markets really believe the tariff sort of story and saga is behind us, I think it's going to be a very big cyclical rally. So I'd be expecting industrials and financials and tech, especially the washed out tech, which includes the Mag 7, to really lead. But I also think that would include small caps, because small caps have really been hammered by all this economic uncertainty. And so once that visibility returns, and then we think about 2026, and that's probably when the Fed is, more dovish than they are now. That's a tailwind for risk assets. So I actually think, weakness here should be bought, and I'd still be buying dips.
We got a combination. We know all of Wall Street's really just reading fund strat, Tom. We get that. But they also sometimes publish their own stuff. So we got kind of a collection of a lot of comments this morning. Barclays said this, and I thought this was an interesting take, and then you can respond or not. It is not clear this is a catalyst for a sustained new risk on, given the complications it could pose for tariff revenues, the tax bill, and the bond market. And the point I think they're trying to make is the tariffs are supposed to bring in all this money that could influence how the tax bill ends up. And of course, that could influence the stock market. So if the tariff money goes away, even temporarily, does that impact overall DC tax policy and thus the equity market?
Well, I would chalk that up to another piece of a wall of worry. Over the last couple of weeks, as markets rallied, our macro clients have actually been really fighting this tape. They've been very skeptical of stocks rising, and we can see it in the prime brokerage data where gross is actually high, but net is low, meaning hedge funds are shorting this rally. And we know there's still a lot of cash on the sidelines. So investors are looking for excuses for the market to fall. I mean, I'd say even that interpretation from Barclays is just another good example. I mean, previously we didn't want high tariffs. Now someone's arguing that if tariffs are lower, it's bad for the fiscal situation. I almost think someone's trying to say heads I lose, tails I lose. But at the end of the day, if we get a tariff resolution, that's good for stocks. And I think companies survive this gauntlet of like terror. That's why multiples should be higher next year.
A bunch of these smooth brains on the internet, I think is the right term. They're going to, the tariffs, look at the tariffs, right? I'm calling it right now. There's a line in the sand. We change strategies, right? As a country. I don't agree with changing the strategy. I don't like it, but that's what just happened. And so now I'm going from telling you that tariffs are deflationary, which inflation fell off a cliff since December of last year because of all the tariff stuff. Everyone was worried about this economic slowdown, all this stuff. I'm telling you right now, we're going to regime change, and now we're going the other direction. Inflation is going to come back, and it's because they're going to print money. Milton Friedman, famous economist, great guy. What's he say? Inflation is only created in one place, Washington, D.C. If they print money, that leads to inflation. They're going to print a lot of money. Spending bill, hey, party's back on, baby, right?
That's something everyone in government can agree on.
Hell yeah. Listen, if they put a bill in front of you that says we're going to give X dollars to your constituents, who's going to vote against that? It takes somebody so principled, so courageous, so strong of a backbone to say, no, I'm not voting for that, right? There are some people who are going to do that, but they're voting no, knowing it ain't going to matter because most people, they're going to take the incentive, right? And so they're going to vote for the bill. And so you got government spending coming. You got the money printer. You hear things like running the economy hot. That's code for money printing. And so what you're going to see here is you're going to see that. And so ultimately it concludes with one simple thing. We're going to go back to this only intelligence test that matters for people in their financial life. Are you a saver or are you an investor? If you're an investor, you're going to be a winner. If you're a saver, you're going to be a loser. Look, I just shoot straight, as blunt as I can put it. If you are sitting there, which something like 50% of Americans are sitting there with no investment assets and you have 100% of your wealth in dollars, you're going to get crushed. I don't want you to get crushed. You don't want to get crushed. I wish the system wasn't built this way. I wish that incentives weren't in place. I wish they weren't going to print money. Everything we can talk about. It ain't going to change the fact that you're going to get crushed if you're sitting with 100% of your wealth sitting in dollars. And that's at least a very big percentage, if not 50% of the country.
Once again, the bureaucracy faceless, entrenched, and immovable has won. Budget reform? Buried under layers of red tape, every effort to cut waste was met with media pushback and internal sabotage. Even the most obvious cases of fraud and abuse were protected by Washington's built-in inertia. The message couldn't be clearer. Don't hold your breath for fiscal reform. Don't count on a smaller government. The spending engine is roaring back to life, and with it comes the harsh reality of an inflationary future. Let's watch more clips from the interview.
Well, let's take a step back here for a second, right? So, I think there's a lot of folks who were very excited about the current administration going into the White House. Now, if you remember, I called out throughout the entire campaign season over and over and over and over and over and over again that it was a shame that neither candidate was promising to balance the budget. And I said to myself, it used to be during my adult lifetime, you pretended. I promise I'm going to, balance the budget. Yeah, I'm going to give it a good try. Whatever. You get in office, you don't do it. So on one hand, I was like, well, at least they're not lying to us on this one, right? They know they can't balance the budget. On the other hand, like, at least pretend, right? At least pretend you care. So when Trump got into office and he started talking about balancing the budget, I actually got really excited about that. I said, man, he's going to take a run at this. Maybe he actually didn't talk about it on the campaign trail because he knew that no one was going to believe him. But now that he's in and he's got this mandate and this landslide victory, like he can go and he can really make a lot of change. And then he was like, I'm going to recruit an all-star team. I got Elon Musk, the slasher of waste in all these companies. He's going to come in and Elon's going to bring all the super genius kids and he's going to bring, the co-founder of Airbnb and he's going to bring that. And I was like, dude, let's go. Silicon Valley's going to Washington and they're bringing their scissors and we're going to cut all these things. So it's exciting. And the other thing that they did, which I thought was really important, is they essentially figured out how to make it a high status thing to go work in the government. How long have you heard me say that none of my smartest friends want to go work in the government? That changed over the last, 12 months. A lot of my smartest friends went to go work in the government and also wanted to go work in the government. So I think that was like a very new thing that happened. Fast forward, now we're in May. They got into office in January. White flags out. I hate to see it. I don't like it. White flags are out. And my assessment of what has happened is that the DOGE and cost-cutting measures ran into two things. One is the brick wall of bureaucracy. It's just like, it's a blob. It's a faceless, big brick wall of bureaucracy. There is no thing you can't get to it, right? And so the blob continues to win. It's like Bubble Boy. Remember that movie?
Yeah.
Right? It's like we put the government spending in this big bubble thing. Nothing can get in. You got a biological attack, not getting in. You got cost cutting is not getting it. Just whatever you try,
you're going to run into a roadblock.
Bubble Boy is protected, right? The budget is protected. The other thing they ran into is they ran into the system. Now, the bureaucracy, to be clear, is not only the politicians. Politicians, do you remember the videos of them showing up outside of the government buildings demanding to like see Elon?
Yeah.
Or being like, what do you mean you're going to cut the whatever? And these guys were just tweeting like absurd things every day. It got to the point they were tweeting things. You're like, that can't be true. There's no way that nobody with half a brain previously allowed that to happen. And then it comes out and it's like, that is true. Like these people are just blowing cash all over the place. And a lot of it was waste, abuse, fraud, I think was the terminology that the administration used. I would argue there's a lot of people on the internet who were like, you should put that in the translator on Google Translate and actually it translate to corruption. Whatever words you want to use, that was what was happening there. But they also got fought by the media at every single step. And so what we had was we had a part of the equation or part of the conversation that did not have the American people's best interest at heart. Instead, what they said was anything that our political opponent does, we are going to fight back against. And whether people like it or not, the media is very left-leaning.
And finally, we have to face a tough reality. Political partisanship and media bias are making real reform almost impossible. When the media goes on the offensive, especially against those advocating bold, disruptive changes, even well-intentioned efforts get buried beneath ideological warfare. The debate isn't about ideas anymore, it's about power, and in that fight, the needs of the American people are too often ignored. If you value honest, no-spin analysis, don't forget to like this video, subscribe to the channel, and hit the notification bell so you never miss a critical update. Want more insights like this? Watch more videos from our channel. We cover everything from macro trends and fiscal policy to crypto and digital assets. Drop your take in the comments. We want to hear from you. Every like, comment, and share helps this channel grow and keeps this conversation going. Thanks for watching. See you on next video.